But the management at Zensar Tech is now with us. Sandeep Kishore, CEO and MD, is now joining us. A strong growth, but what led to the decline in margins? Is the company becoming aggressive to get orders?
Yeah, hi, good to be talking to you. You're right. Yes, we've delivered strong volume growth on constant currency, sequentially 4.5%, year on year over 17.5%. If you take a look at the core business, which excludes the ROW, rest of the world, and the third-party maintenance business, year-on-year growth is about 21.5%. So very focused to ensure that we are executing well to a digital-led growth strategy. Digital now constitutes about 45% of the business, and that grew close to 35.8% year-on-year. There has been some short-term impact on the gross margin because the last 2 quarters we have won several large deals. Last quarter itself we announced $200+ million of large deal. In the previous quarter there was another $200+ million. Several of those deals are in transition currently, and that does impact the short-term margin. So that's what effectively led to an operating margin contraction at the gross margin level of about 3.8% sequentially. But overall I think we're executing quite well to the strategy that we have defined.
Right, but when you talk about margins, where do you see it coming up? Once the volume goes up, once the operating leverage benefit comes in, do you think margins slowly and steadily will come back to the normal levels?
So our core business margin has been roughly about 15% at the EBITDA level. It dropped to 12.5%, largely because of the gross margin impact that I explained earlier. We do expect in the midterm that it will come back up to the 15% range.
Right. What is the kind of growth that you see from the developed markets in the near term, especially considering the risk of Brexit, how things are going over there? How do you see that shaping up?
See, US is a very large market for us. US is close to about 75% of the business for us. Europe, which is largely UK, is close to about 12%. And then we have an interesting market, quite sizable for us, which is South Africa. We are, as I mentioned earlier, not focused on the rest of the world. That is part of the non-core business explained earlier to you. In the developed market, particularly in the UK and in the US, we still see a very strong demand environment. We have a pipeline of over $1 billion right now as we speak, which we are in multiple stages of pursuing, fighting, and winning.
Right. In terms of Brexit, the sort of movement that's happening over there, how big a risk do you see in Europe? Do you think it's a matter where people will not invest till clarity emerges, and that could be a risk for the IT sector?
So far, we've not seen any softness in the demand environment on account of Brexit in the UK. I do believe still that the clients are definitely waiting and watching what actually happens. But given the sector that we operate in, and the digital and the cloud-led focus that we have, clients will need to find a way to keep the competitive focus on. So they will need to invest into technology. And as and when Brexit happens, there will be some short-term impact. But in the medium term, the long term, I don't see that as a big concern for us.
Right. In the earlier days, one would say that if Indian currency is at an all-time low, technology, mid and large cap space would do well. Do you think things are changing? Pricing benefits are now, margin benefits are now being passed on to clients for better business?
I do believe that companies like ourselves, which are in the mid cap, are far better positioned because we are disruptors into the marketplace. That's why digital as a percentage of the business continues to do quite well and is showing pretty aggressive growth. There is huge opportunity which we see, particularly in the sector that we operate, which is financial services, high tech, and retail and consumer. So I do feel we are positioned quite well in that category.
Thanks so much for taking our time for us, and all the best for the future. Zensar opened down about 6-7%, but is now down 3%. Maybe factoring in that growth could come once again. Now let's look at Sun Pharma. Now this is a stock